Peer-to-peer loans. If you think about peer-to-peer sharing, this is that with money. They are passing banks to borrow money from other individuals, and lending it can mean strong returns. One company thriving on this global trend, LendingClub.com. Founder and CEO Renaud Laplanche, I hope I'm saying that correctly, joins us right now. Good morning.
Good morning.
Just walk us through exactly what peer-to-peer lending is and how it works so that everybody understands what we're talking about.
So Lending Club is really an online marketplace. So we have borrowers on one side, investors on the other side, and we sort of underwrite, price, and service the loans, and we let investors build a portfolio of loans that includes sort of hundreds or thousands of small loans made to borrowers. So the benefit to both borrowers and investors is that we operate at a lower cost than the banks, and we can pass on these savings to both sides and really offer lower interest rates to borrowers and better return to investors.
So here's the question. If I am an investor and want to go on your site, I can look at all sorts of different opportunities to loan to individuals on the other side. Is that the idea?
That's right. And some investors like to review every single loan application. Other investors have more of a portfolio approach, and we grade and price loans. So we would have an investor going conservative and choosing a portfolio of A and B grade loans,
right,
or some other investors having a more sort of aggressive portfolio, but in every case staying very diversified and investing in.
So here's the question. There's a number of states that don't allow this, and I'm going to read this from the Wall Street Journal. Chris Naylor is a securities commissioner in Indiana, which is one of 26 states which doesn't allow this, and suggests that actually one of the big issues is that investors aren't getting enough information. It's not regulated enough in terms of the data that they're getting on those that they'd be making loans to. What do you say to that?
Yeah, I don't know if I would agree. I think we are actually extremely transparent, and you can get a lot more data from Lending Club than you would from a bank, for example, or from other type of investments. We have a website that makes a lot of information available. We actually have the entire loan portfolio available for download on our website.
Mm-hmm.
So you can see on an anonymous basis, obviously, you can see all the loans that have ever been issued by Lending Club since we started in 2007, and look at the performance of every single loan. There's a lot of data available, and we also we're a registered securities issuer with the SEC, so there's a prospectus that describes these securities and includes all the risk factors that you would typically see in a securities offering.
Okay, we got to leave it there. We have a little bit of breaking news, but we thank you for joining us. It's a fascinating company, and I should say that Mary Meeker and John Mack are directors of this company, so there's a lot of interest across Wall Street and the venture community around what you guys are doing. So thank you for joining us.